InvestorIdeas.com Podcasts.
Good afternoon and welcome to another episode of InvestorIdeas.com Podcast. Today's podcast is sponsored by Cannabis Swiss Corporation, trading on the OTC as CSUI, a fully licensed cannabis cultivation and distribution company in Switzerland for recreational tobacco products and medical CBD oils. Cannabis Swiss products are laboratory tested to ensure that the end users have access to a standardized, safe, and consistent product, and Cannabis Swiss Corp currently sells via a distribution network of Swiss retailers and online shops under the retail brand Alpine Cannabis. On today's podcast, we're looking at a couple public and mainly a few private company announcements. So looking at Subversive Real Estate Acquisitions, REIT LP, trading on the NEO as SVX.U, as well as looking at Flora Growth Corp, ALID Corp, trading on the OTCQB as ALID, BDSA, as well as Stash & Co. So first starting with Subversive Real Estate Acquisitions, RETLP, who today announced it's entered into a binding agreement to acquire real properties in the amount of approximately $97.4 million US dollars and originate or acquire 85.4 million US dollars of first lien mortgages to become a leading real estate capital provider for prominent cannabis operators that own or are seeking industrial and real estate in high growth markets in the US. And the acquisition of the initial portfolio will be the REIT LP's qualifying transaction and is the first issuance of the popular SPAC vehicle converting into a public REIT. We are thrilled to announce our qualifying transaction that delivers on what this experienced cannabis real estate team set out to create, which is a diverse initial portfolio consisting of high-quality, mission-critical industrial and retail assets operated by leading U.S. cannabis operators, stated Michael Auerbach, the executive chairman of the REIT LP and founder of Subversive Capital and REIT LP's lead sponsor. Subversive REIT LP's platform combines disciplined real estate underwriting with deep operator and industry knowledge to meet the needs of the high-growth cannabis industry. Now, Mr. Auerbach continued, with a robust pipeline including asset purchase options, we are very pleased to be entering the public market via our SPAC transaction, which should allow us greater access to capital, continue to grow our business, and deploy capital into a capital-starved industry. We believe that our strong portfolio and platform positions the REIT LP to provide an attractive level of distributions as well as substantial growth opportunity over time. The cannabis industry continues to grow at an incredible rate, COVID-19 notwithstanding, driving demand for well-located cannabis industrial and retail assets, said the REIT LP's CEO Richard Acosta. Now, our compelling thesis regarding the value of strategic cannabis real estate assets was validated by our ability to raise and deploy capital with some of the strongest and most well-known operators in the space. We're excited to be providing much-needed growth capital to operators across the supply chain while providing investors an exciting investment opportunity that combines meaningful growth and income potential as the second publicly traded cannabis REIT. Now, following the closing of the qualifying transaction, the REIT LP will be initially managed by the REIT LP's general manager, Subversive Real Estate Acquisition REIT GP Incorporated, and on closing, the general partners management team and board of directors is expected to be comprised of Michael Auerbach, the executive chairman and director, Richard Acosta, the chief executive officer and director, Michael Miller, chief financial officer, Eric Clark, chief operating officer, Leland Hench, director, Scott Baker, director, Omar Manjali, director, Tavio Bacali, director, as well as some more, and the REIT expects that Ann Sullivan and Leland Hench will resign from the board of directors shortly after closing, and the board will conduct a search for their replacements at such time. So another publicly traded real estate acquisition firm that is focused on the cannabis industry. I do think you're going to find more and more, again, not a huge booming segment of the industry, but at least a little bit more attention paid to this section. I've talked about this before in a few of our interviews in the past, looking specifically at some of the guys from the Cannabis ETF, as well as some of our more investor-focused interviews, have really discussed that real estate for this industry is one of the healthy investor points for a lot of big capital. When they're looking at this industry, they're trying to avoid plant touching still as much as possible. Obviously, if federal regulations change, that will change aggressively as well. But for right now, this offers sort of a safety entry point for some investors to look at as they're just dealing with the real estate acquisition side of this. The other good sort of asset for the industry as a whole is that you do need more of these sort of real estate acquisition companies out there. There still is a difficulty for lots of cannabis industry or companies that are starting out to find suitable locations to either rent or lease from or buy. Again, lots of renters and landlords are unwilling to deal with certain cannabis companies, so that's still going to be an issue moving forward. And I do think that this is, again, when we've seen what's happened with COVID-19, there's now a huge focus on changing locations or finding more suitable locations moving forward. And again, also looking at the size and quality of those locations to accommodate more guests and deal with social distancing issues. So I think a lot of the retail stores that you've seen so far are quite space negative. You're seeing a lot of really tight spaced retail outlets out there, as well as for the accessory side and even for production side, whereas I think that might be changing. And again, it just gives more opportunities for these real estate acquisition firms to jump into this sector. And I think there's a lot of opportunity there, as again, you're seeing new cannabis companies, whether they're producers or retail stores, pop up almost every month. And again, there's tons of new markets expanding in the US. So I expect this company to have a fairly good and consistent year, and I would expect to see maybe one or two of these REIT acquisition firms for the public market start showing up, if there's going to be any competition within the next year or so, as I do think that this is sort of one of the last times you'll see that growth for that area. Next, looking at Flora Growth Corporation, who announced that the launch of a new division, Hemp Textiles & Co., along with the start of sales of its inaugural hemp-based clothing brand, Stardog Loungewear. Now, this division will develop and sell to both consumers and businesses hemp-based textiles and loungewear. Now, Flora prioritizes sustainability in all of our business practices, and we anticipate that our new Hemp Textiles & Co. division will help us meet those goals by utilizing organic natural materials and not wasting any components of the plant, commented Flora's president of consumer goods, Louis Mention. Now, we believe that the new Stardog brand will resonate with consumers, and the products will combine style and comfort using a natural soft hemp material. And with the recent surge in demand for loungewear since the start of the pandemic, in the fall and the winter seasons ahead, we are launching this brand in an ideal time. This is one of the segments of the industry that's quite frustrating, is the textile side. This is something that a lot of early speculators assumed was going to be a huge growth section of the hemp and cannabis industry, was the textiles segment. And so far, we've seen that extremely underutilized for the amount of producers and the amount of hemp biomass that's available out there, and even just being thrown away or composted. A bunch of that could have been turned into some sort of textiles or clothing wear or just material in general. And ironically, very few of these companies are even using it for their own packaging, which they're very capable of doing. But obviously, the infrastructure and sort of technology to easily and cost effectively utilize that is still not readily available or still not being utilized. So it is good to see that there's definitely companies that are starting to pay attention to the fact that this biomass should not be wasted, and there's tons of utilizations for these products. But I do think that this is, we've seen this a couple times before, very small scale adoptions of the hemp textile industry, and hopefully at some point this will actually be opened up and we'll see some US and Canadian based companies and other actual large hemp production companies start jumping into the hemp textiles division, as opposed to what you're seeing right now, which is pretty much heavily dominated by China. And again, you're having a lot of issues with the actual quality of the products that they're creating. So hopefully this is a trend that will be picked up, but most likely you're just going to see this in a small scale. And it will be interesting to see how the Stardog Loungewear does over time, as I do think that style of brand is an effective choice. Next, looking at ALID Corporation, an international medical cannabis company focused on creating and providing targeted cannabinoid health solutions, announced the signing of a definitive agreement to launch a new CBD-infused electrolyte replacement drink with the cannabis company Reef Drink Company. Now, the first product to be produced under the agreement will be a CBD-infused electrolyte and rehydration drink targeted at veteran and first responders as an extension and tactical relief brand. Now, this product will be called Tactical Hydration and launched under the Tactical Relief brand. In addition to this, a second Allied Corp brand has now been launched called Equilibrium Bio, and as with the Tactical Relief brand, the Equilibrium Bio brand is owned, managed, and supported by Allied Corp. And this brand will represent health and wellness products targeted at both male and female athletic customers. And the first product will be called Hydration Blast by Equilibrium Bio. Tactical Hydration and Hydration Blast products will provide a CBD-infused drink for rehydration with sodium citrate electrolyte replacement supplements for athletic and veteran consumers. And both the Tactical and Equilibrium Bio drinks will be available in fruit punch, lemon lime, and orange flavors. And additionally, Allied has products in Equilibrium Bio and Tactical Relief product pipeline coming down. Now, ALID currently anticipates that the first 15,000 sample drink products being ready for wholesale purchases within October 2020, and from these 15,000 sample products, they will be pursuing purchase orders and national distribution. The launch of the Equilibrium Bio brand and the electrolyte replacement drink represents a great milestone for ALID Corp, showcasing some of the additional depth of our product pipeline and brand representation. We're looking forward to the expanded opportunities that this will bring to our natural health vertical. And ALID now has 4 brands to market: Tactical Relief, Maxa, Buds Pure Natural, and Equilibrium Bio. And we're excited to build upon this continued success, says Callum Hughes, the CEO of ALID Corp. So seen lots of different CBD infused beverages coming out over the last 2 years. A lot of them have been pretty standard and simple with the overall format that they're going for. A lot of them are simple, sort of bottled water or bottled juice style. You're starting to get some that are a little bit more like sparkling sodas and different versions, some coffees, some teas. In general, the sports drinks, there's been a few of these CBD beverages that have been targeted towards the athletic community. Most of them have been in a different CBD format than a drink. I think it'll be interesting to see what kind of retailer partnerships they can get with this product and where they can actually see themselves sold in stores. It's a big difficulty with the CBD market in the US. It's still, again, heavily unregulated, and most of this is based off of online sales, so I think that'll be their best success. Obviously, if they have some sort of athletic sponsorship at some point, I think that'll obviously push the brand forward. But it's one of those things we've seen lots of athletes endorsing CBD pretty aggressively over the last couple of years. I don't know if you're ever going to have a CBD sports drink really take over that same space. I do like that they're focusing on it for veterans and first responders. But again, I think in general, people are not going to have them in a sort of sports hydration out on the go drink. I think it's going to be more of a calming relaxer drink for a lot of people. But it'll be interesting to see if this gets picked up and again, sort of where you see them in the retail space. Lastly, today, looking at BDSA, a company that helps businesses improve revenues, reduce innovation risk, and prioritize market expansion with accurate and actionable cannabis market intelligence and consumer research, announced the expansion of its cannabis retail sales tracking coverage to include Canada. Now, BDSA forecasts Canada's cannabis industry revenues will total $2.5 billion in 2020 and will reach $6.1 billion by 2025 at a continued annual growth rate of 20%. In year to date, though, through August, combined sales in adult use channels by private sector retail in Alberta and BC reached 524 million Canadian, with monthly sales peaking at nearly 85 million in August. We're excited to announce the expansion of this retail sales data for the Canadian cannabis market and our partnership with Buddy, says Liz Stahura, the president and co-founder of BDSA. Now, with the addition of sales tracking, we now provide a comprehensive suite of market and consumer analytics and insights covering the Canadian market. Canada is the largest national legal cannabis market in the world and home to a passionate and engaged cannabis consumer base. And understanding product innovation, consumer preferences, and shopping behaviors in Canada will inform those companies participating in the Canadian cannabis economy and provide insights to other markets, industries, and companies with interests in the cannabis space. Now, some of the insights that the Canadian market included were in Alberta. The year-to-date sales through August are 330 million, with monthly sales growing almost 62% between January and August, peaking in August at 51 million. And monthly sales of Cannabis 1.0 products increased 32% between January and August, while 2.0 products increased almost 600% between January and August. And Cannabis 2.0's contributed just 5% of sales in January and grew to 23% in August. Similar sort of stats coming from BC as well. Year-to-date sales through August are 154 million, with monthly sales growing to 90% between January and August, peaking at 26.2 million. And monthly sales of Cannabis 1.0 products increased to 76%, while 2.0 increased 175%. And Cannabis 2.0 products made up 16% of the sales in January and 23% of the sales in August. And I think that's a good standard to look at for where you're seeing the advancement of Cannabis 2.0 products. I do think that give them another year, they're going to take up probably closer to about 20 to 30% of the market easily, if not more so. And that'll also depend on how you're sort of segmenting that section, if you're including beverages and some of the other formats as well. But I do think in general, you're starting to see consumers get more and more comfortable with Cannabis 2.0 products. And I do think that you're going to see a lot more great insights coming out of BDSA being in Canada now, as it is a more extensive and reliable market to focus on. As much as the US markets have bigger consumer inputs, The biggest difficulty when looking at the data and analytics for the US market right now is the inconsistency when you're going from store to store, from producer to producer, and from state to state. There's lots of differences in regulations. There's lots of differences in styles and formatting of the business. There's lots of differences in the actual just retail setup and what's legally allowed. There's lots of differences between recreational and medical. So I do find that as much as you get a lot of data from the US markets, you don't get any sort of consistent data and any sort of reliable things to focus on. Whereas at least in the Canadian market, there's a little bit more consistency. There's a little bit fewer brands as far as retail providers to look at. And as far as product SKUs as well, we have a little bit more of a segmented market with a little bit more consistency overall. In the US, you're seeing a little bit more of a difference between strain potency levels that would be out on the market and price points. Whereas in Canada, it's pretty even across the board. So it really is depending on consumer preferences and quality over time, as opposed to in the US, there's a lot more options for branding as well as price point availability. BDSA Stahura also added our partnership with Buddy builds on the extensive network of data and insights for both companies, bringing comprehensive, granular, and insightful sales tracking data with the high standard of quality, reliability, and actionability that we are known to provide. With the launch of BDSA now provides retail sales tracking for 10 markets and will be adding additional markets in both Canada and the US in the coming months. So definitely a company to pay attention to in their data and analytics over the next couple of years. And I do think they'll continue to see that trend that they've already somewhat noticed, which is a move towards Cannabis 2.0 products for most of your sales. And lastly, today looking at Stash & Co., a Canadian-based cannabis retailer in collaboration with software company StrainBrain, who announced as the first to market with the AI Bud Tender software. Customers can now receive tailored cannabis recommendations based on recreational parameters such as a desired taste, effect, and potency. Now, the StrainBrain recommendation engine is powered using millions of data points derived from hundreds of thousands of user reviews on various cannabis strains available for sale in Ontario, and the data is then used to generate AI-powered personalized bud tending. We're very excited to be the first retailer in Canada to offer AI bud tending as part of our retail operations, explains Joe Glynn. With the increase in demand for online orders we are currently experiencing due to the recent spike in COVID cases in Canada, it's our aim to provide the same top-notch service online that we do in store. Now, Stash & Co. has been the ideal partner for StrainBrain. They have the largest selection of high-quality products, forward-thinking leadership, a robust and loyal customer base, and are ready to use the best available technology to improve the customer experience, explains Andrew Leber, the founder of StrainBrain. In fact, Stash & Co. are among the leading cannabis retailers in the country, and we are thrilled to continue working with them on crafting the best possible cannabis experience. So AI bud tenders now going to be a thing that's been talked about a lot over the last couple of years when it comes to retail, of using machine learning and AI to better inform cannabis consumers. I do think it's a smart play for online sales. I think it's going to be a useless play for in-store sales. But I think in general that this is only a step in the right direction. You're going to probably see more companies use some form of machine learning or AI when it comes to their online stores recommendations and overall analytics and data usage. And again, this is also going to become more available and sort of easier to implement because now there are enough data points for these companies to base this off of. That's the biggest issue when looking at anything when it comes to whether machine learning or AI in this space is that there still is a limited amount of real world data as opposed to anecdotal data. Obviously, there's tons of information and reviews and sort of anecdotal discussions about cannabis strains and effectiveness and potency and all of that jazz. But unfortunately, there isn't a lot of consistent data out there, as I sort of discussed with BDSA. And I've discussed many times with what's going on with medical cannabis by shoppers and sort of the importance of the information they're going to be providing for the medical cannabis community. So I do think that the adoption of this technology is going to be extremely useful. It's probably a few years away from being that useful right now. I feel like even the use of StrainBrain and Stash & Co.'s AI bud tender software is probably going to have some inaccuracies and some difficulties just because, again, of the data they have access to at this point. But I do think that, again, you're going to see at least a few other retail companies look at this type of technology for their online stores, as that's going to be the most reliable way to best inform and sort of control where their customers are going to be buying moving forward. That's all for today's podcast. And once again, today's podcast was sponsored by Cannabis Swiss Corporation, trading on the OTC as CS2I, a fully licensed cannabis cultivation and distribution company in Switzerland for recreational tobacco products and medical CBD oils. That's all for today's podcast. Podcast is now a certified word trademark on the blockchain through Cognate Incorporated CM certification. InvestorIdeas.com podcasts are also available on iTunes, Spotify, Google Play Music, Stitcher, iHeartRadio, Spreaker, and TuneIn. If you'd like to be a guest or sponsor of this podcast, please contact InvestorIdeas.com. Investor Ideas reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website, and this podcast is not an endorsement to buy products or services or securities. Investors are reminded that all investments involve risk and possible loss of investment. Investor Ideas does not condone the use of cannabis except where permissible by law. Our site does not possess, distribute, or sell cannabis products.